Hi, and welcome to another video on my channel. If you have a mortgage and would like to increase the mortgage, in most cases you have the option to either refinance the mortgage or do what is called a blend and increase. What a blend and increase means is to increase the mortgage using a blended rate. What is a blended rate? A blended rate occurs when two separate rates and balances are blended together proportionally to create one new rate and balance. So let's say that you have an existing mortgage with its own applicable rate and balance, and you want to increase the mortgage to take out equity in your home without breaking the mortgage. The lender can increase the mortgage, but in most cases they cannot provide you with the same rate that you have on your existing mortgage because rates are always changing. So the new money added would be at a different rate than the rate on the existing mortgage. To make it so that the newly increased mortgage has only one rate applicable to it, they would do a blended rate. How is a blended rate calculated? Well, this is a formula which I only tend to use if a client of mine wants to see the math behind the calculation, but you can find online blended rate calculators which can do the work for you, and in most cases I use these type of calculators as well. I don't actually do the long form, again, only if a client wants to see the math behind the calculation. Now, let's look at an example of a blended rate. Let's say you have a mortgage owing of $150,000 and the rate on that mortgage is 3%. You want to increase the mortgage by $50,000 and the rate being offered on the new money by the lender is 4%. The blended rate in this case would be 3.25% with a new balance of $200,000. So with a blended rate, the maturity date remains the same as the maturity date of the existing term. So let's say that you have a maturity date of April of 2000 whatever. That same maturity date has to stay the same when they do the blended rate. The new money added is assigned the lender's fixed rate for the term equaling the closest amount of years to the amount of years remaining in the existing term. Now that seems quite complicated, but here's an example. If there are approximately 2 years remaining in the existing term, the new money is assigned the lender's 2-year fixed rate. So the reason they have to do this is because there are different rates applicable to different terms. For instance, a 5-year term comes with a different rate than a 2-year term. Now, since they are going to be providing this new money for a term of 2 years, because there's approximately 2 years until your maturity date, the lender assigns the 2-year rate to the new money. So what is the benefit of a blended rate? Probably the biggest benefit is it allows the borrower to increase the mortgage without having to break the mortgage and pay a penalty to do so. So what are some examples of where you might want a blended rate? One is when you're selling your current residence while requiring an increase to the mortgage to purchase another residence. This is called a port blend and increase. Now the port portion means that you're bringing the existing mortgage over to the new property with you, and then you're doing a blend and increase to increase the mortgage. Another example of where you might want to take a blended rate is if you're increasing an existing mortgage to take out equity in order to pay off higher interest debt, pay for renovations, purchase investments, or any other worthwhile purpose you have. But before you take a blended rate over a refinance, always have your mortgage professional run a comparison calculation between breaking the mortgage versus taking a blended rate. Because in some cases, particularly when current rates offered by lenders are a lot lower than the existing rate that you have on your mortgage, even when the penalty is factored into the equation, a refinance can save you more money than a blend and increase. Well, thank you for watching. I hope you have a better understanding of blended rates now that you've watched this video. If you have any questions for me, please leave them in the comments section. And if you found this video helpful, please leave a like and consider subscribing to my channel. Until the next video, have a good day.